Good morning, everyone. Hope everybody's enjoying their Thanksgiving with their family and loved ones. And let's cover the overall market. But what I'd like to say, there's three things on my mind. One, we already finished up November. We still have December to go in the market. We have the Hong Kong humanity that President Trump signed the paperwork. Two is the China tariff deal. Is it going to be done by end of the year, or it's going to be delayed, or something's going to cause that reaction in the market? Three is the British exit, the EU, Middle East. There's a lot to cover in North Korea, the testing of their rocket last week. But most important on my mind, if this is the Christmas rally, is it going to continue or reset? We've had 8 weeks continuation up market. We have not visited virgin control points, which are VPOC'S, that are on the S&P or the NASDAQ, about 10, I believe, and we have 12 on the ES. Let's go over the market one by one, and we'll break it down. This is the 8-week continuation higher on the combination of the 4 instrument, and that's the weekly chart 3 here. If I come in and just go from a weekly to a 4-hour, you're going to be able to see how steep this market is. We have the up channel, down channel. We broke through a prior resistance in these 3 areas, and we broke up. We continued from beginning of November till the end of it, continuation higher inside of a smaller range cone, which is a little tighter than usual. And what I want to do is zoom into this area. I am showing you guys the average true range, which is the midpoint of each area, if it's supposed to be bullish or bearish, and the target to the upside. And every time we grinded from this area, we continued higher, went sideways, went higher, consolidated, went higher, consolidated, went higher, consolidated, and went higher. If the combination of those 4 instruments gonna turn back through the channel and fall through, we're gonna visit the gaps lower and the prior pucks, which have never been revisited. These yellow dashed lines are the pucks that are virgin control points, which have never been retested. All the gaps that we have in the profile, gap high, the bottom of the gap, and revisit those areas. Remember, the move was started in here. If you look at it, this was the prior. That was the day on 10/3. We went up, came back, retested. Since we came back from that area on 10/8, we never can look back, and we continued higher. This is the reason why I am aware of this high value area, the high channel and the low channel, and we got a cone in between those 2 channels. If we fall through the cone and we fall to the 50 SMA, the 116 and the 61A, eventually we'll fill those gaps. But remember, we're going to trade what we see, not what we think. Let's go now down to looking at the Dow Jones Industrial Average, the YM. It's going to have the volume profile here. It's okay, but what I'm trying to tell you guys, I want you to be aware of the up channel, down channel, and this cone in this area. And this will show you a little bit more where the pucks are. What I'm going to do is go a little bit in detail on a 5-day to explain what I'm showing you, so you guys can understand. So we're going to grab this area here. There's a gap. You can see it between here and here. I took the volume profile out of the way to show you what I'm looking at. The volume profile shows you the value area high, the value area low, and where the most volume and the time has been spent. If you notice, this is a virgin control point, never being revisited when we took off. We consolidated here, went higher. These are almost identical. These three POCs, they've been revisited. So the first virgin control point, when I say a POC that never been revisited, when we went higher, these went back and forth in between each other, being retested. But this one has not been revisited, or the one down here. So when I look at always the value area high of it, the value area low, and the POC if we have retested it. Since we have not retested it, and this has a green box, I'm just going to show you, there's a green box, that means the advanced decline line, when it took off, and it's got that gap here between this candle here and this one here, this is a virgin control POC, gap value area high of it, and this one down here, the candle, shows that we never revisited this gap. Is it possible to revisit? Yes. But do we look at it for continuation to the upside or come back and revisit? Yes. Make sure you trade what you see and what the technicals gives you before you become biased to one side. So that's looking at the Dow Jones Industrial Average, still in an up channel, has not broken. And this is the breakout of the 2800. 28,000 on the Dow. Keep an eye on it. It's a very mental game. If it falls through it and come back, revisit the value area high in the POCs, we continue lower, okay? So let's take a look at the NASDAQ NQ. And what I want to do is do the same thing. This is the gap, value area high, value area low in the POC. The gap before we continue, that's a POC that's never been revisited. That's another POC which we were never revisited. So remember, those virgin control points are going to be in the value area high of them, and the POCs are going to be revisited, as well as the value area lows and the gaps in the candles that show you the trend. Let's go back to a 4-hour chart, and we'll show you the 8 hours continuation. We have this up channel, down channel. We got this cone in here. I put a wider one from here. When we continued, we were consolidating before the breakout. What I want to show you, this was a consolidate, came down, came back up, consolidate, broke up, came back, retested that area, and we continued higher. We do have an up channel and a lower channel. Inside those two wider channels, continuing higher. If we fall through the first 18 SMA in this channel, your first visit is this area, the 50 SMA, the consolidation of it, come back to the low. I'm not saying that we can head lower. All I'm saying, be careful, because remember, this is the Christmas rally. We've had 8 weeks continuation higher with no reset. And what I want to go down to is this area here from November, same issue. We never revisited these POCs. There's 1 here, there's 2 here, there's 3 here, there's 4 here, there's 5. I mean, I can go on and on. But what I'm trying to say, keep an eye on the channel, the technicals, if this is coming back in, because we set up a value area high in a POC on Wednesday. Thursday was a holiday. Friday was a short day trading. I came to the room just to check on the guys. There was not much volume. I did like 4 trades that were okay. 2 didn't work out. I was fine, made a little change, and walked away. So we do have a POC which has never been revisited at the high. We reset on Friday. If this is going to come back in and fall, be careful. If this is going to continue and break the channel, look for the upside. So trade what we're going to see. Let's go now to the RTY. And the RTY, what I'd like to do is show you something on the daily chart in the Russell before I go to the ES. On the Russell, we can see that we consolidated for a while. Whoops, a little bit smaller. Okay, we consolidated a couple of times. We eventually trying to break this area. We did it once, twice, 3 times, 4 times, 5 times, and we're trying to push higher. On the weekly chart, what I see is that there is consolidation in this range here. We did it once, twice, 3 times, 4 times, and trying to break out. These 2 candles took us down. If we look at the high of that one, is 1641.4. And the close of that one is 1639.7. Let's call it 1640, 1642, okay? If this candle's gonna break up, the high of it was 1636.1. We consolidated week 1, week 2, week 3, week 4. We pushed higher. Then we did 3-week side action, which looks like a flag, and we pushed higher. If we broke through this channel and the 78.2 fib, which we retested here, remember I had this oval and I have this area here, which took us down, this candle here. I think eventually the gap will be up here because the distance you travel from here to here is the same distance you travel from here to here. What we can do is just show you how to measure it mathematically, or just using a hand-drawn tool, which is like a box. If I take this area here to this area down here, which was the consolidation, that's a box. If I take this box and I duplicate it and I move it higher, and that would be the same distance we're gonna travel to the high from the breakout of it. You see it? So I hope this was helpful, and I will leave this here just on the video so you guys understand it. When we travel that much, that means the distance has a possibility of coming back and breaking out of here, continuation higher to the upside of this weekly box, which shows 100% of the move back up. If the Russell decides to go the other direction, or we don't get a breakout, okay, we don't get a breakout in it to the upside and we fall through the 1600, these are the gaps that we're gonna fill and fall back in. Remember, the Russell is the canary in the coal mine. It moves first up, it moves first down. So what I'm trying to show you is to use channels, or breakout and breakdowns in boxes. If we don't use Fibonacci's retracements, that means the move can be continuation to the high side. What I did, I used the bottom of this candle and the high of this candle, and I duplicated this box to the upside to show you that the distance can travel 100% of that move. Let's take a look at the ES/ES. The ES has done its own move up as well. It has been grinding higher. It has never stopped for the last 8 weeks. We are in an up channel. These two white channels, you can see them. We have the first breakout of the prior candles here. We broke out of the 3,000 area and continued higher. We have moved to 3,155. We have one virgin control point at the high, 31.55, and we have 12 that are stacked below us since we started the move on this cone from November. So let's just zoom in from here and let's talk about it. I have taken the overnight action. This is a gap. This is a POC. This is a POC. This is a POC. This is a POC. That's a POC. That's a POC. There's a gap here. You see it. Consolidated, a POC, higher, POC, higher, POC, POC. And we have a prior POC here. Let's go to the 4-hour to show you how it looks like, or the hourly chart on 20 days. I'm not going as far back as I can. This is the gap from Friday to Monday, never been revisited. So if I really want to have a gap, what we do, we grab a box again. We do a box. What we do, we grab the candle of this one low and the candle of this one high. We make a box. We extend it as far as we can to the right. Edit properties. So what you do, we have this high and low, and we move it over to the other side, which is, let's go 8 days, 10 days out, and this will create a box to the right side. We do the same. This area has been revisited, and the epoxy, this consolidated, came down. We revisited the top of this candle, and we revisited this in the overnight, and daily action at the 30.90. If we fall through this first cone, our 50%, 50 SMA, 50% is 61 would be the first visit, and this is part of the gap. Then we have this one, which we already revisited, but another one is down here, which is we're going to do a continuation to the right side. What I'd like to do is edit property and move it to the right. We'll do it to the 8th. Here we go. And that will give us a little extension to the right side. So basically you have to understand that those POCs are continuation to the high side. What I'm going to do is move from here to here just to show you those first 5. This is a POC that's never been revisited, okay? This is another POC that's been never revisited. This is another POC that's never been revisited. This one is the high one from the Wednesday before Thanksgiving. So we have one virgin control point, which is higher, and we have the other ones to the downside. We are stacked 12 VPOCs to the downside. So if I look at this one, what's this VPOC? We're just going to highlight it, and the first VPOC to the upside that's never been revisited is 31.37 quarter. The next VPOC is 31.29 area. So, and 31.29, that's a VPOC that's never been revisited. We have this gap, the high and low of it. Then we have this POC that's never been revisited, 31. Let me just mark it correctly. 31.0807. So the value area high of it is 31.11. The value area of this gap, the high and the low, 31.19 to 26. So what I've done is basically showing you how we can look at those virgin control points, whether they are to the upside or the downside. Another one would be below this. If I zoom down, we revisited this in this area. What's another virgin control point which we never revisited is this area here, the 30.70, the 31.0850, the 30.60.75, and I can go on and go on till we kind of get an idea. This is the gap, you see it? This is the high, the low of this area, the high of it. What's this virgin control point? Another 30.60.75. If I continue to the right, I can go further and further till we get to where the 30 days out since that move started. So this is why I am trying not to be biased to the bull side or the bear side. I want you to understand the first move started in this area. We went higher, came back. This is a POC. This is 2. So we have 12 POCs stacked to the upside with 1 on the top. I'm not biased to being bearish or bullish. As long as we are above 31.30, we're going to be bullish. Below this area, watch your fingers because it'll end up to turn the other direction. And what do I have here? An oval. What I'm going to do in this area, extend this one here to the right, edit the box, and we're going to go to same thing to the other side. We'll do it to the 8, okay? And we'll do this one to the 8, edit property, and we'll go to the 8. Come on. So I hope this is helpful to show you why I am a little bit not being biased to the short side or the long side. I'm just showing you how to use the volume profile in order to assist you to be bullish or bearish. On Friday's action, short trading hour, the value area high at 31.3850, the value area low, which shows you the POC 31.46 quarter, and the value area, the high was 31.48.75, value area low 31.3850, and the POC is 46. As long as we are above the 40 area, we're going to be bullish. Below the 37.50 and the first puck we visit back down, it's going to become bearish. Do we fill all the gaps? Maybe not. We may do just like a shoulder. This is the head of it. It creates a shoulder here, which looks like a cup and handle, and continue higher. What I'm going to do is show it to you on the daily. Okay, I'm just going to show you how it may look like. This is the move up. It may come into here, consolidate, and U-turn and continue higher. I'm not suggesting this is bearish. I'm just letting you be aware of it. Once again, this December's around the corner. When we come back to the market on Monday, this is December, are we going to get those 30 days continuation high, those 20 days in the market for the Christmas rally, or are we going to get the first week and a half, 10 days retracement, then have the Christmas rally? Keep an eye what the technicals give you. Hope this was helpful. We did Disney last week in the group DIS. And what I want to do is over the Disney, we had this gap in the earning report. I said that, you know, on Friday, I said this week we should go long higher. We did. I still have a small position as Disney. My stop is 150.6. We tried to retest the 54. We haven't been able to claim it. If this is consolidation to continue higher, I'd like to see the 59, but if we draw the high from here to the low here, that means you're going to get an extension around the 54, 57 to get to the 59. If we cannot clear the 54 area, we fall through the 150, 60, the deal is off on Disneyland. I still have one more piece left in my retirement account. I took it, we made some money from here, the 47, 49 area to this 52 area, 60. I downloaded a portion of my position, 2/3 of it. I left 1/3 or 1/4 of it, and I'm left with 150.6 as my stop. Okay, so this is Disney. Let's take a look at GC, gold, oops, slash GC. Gold has been, you know, in a grind down, consolidating. We have not been able to take out this kid. See, I showed the gaps every time. It rounded to bottom, a cup, push up, rounded bottom, a cup, push up. And now we are chopping back and forth. Everybody's thinking, hey, gold seemed to be flagging in this area that we're thinking it's going to go up to here. Unfortunately, hasn't been able to get through these two channels here. If gold, it's in the middle of this range. If I extend it, you can see it. We're trying to retest that middle of the range. If 1440, 1460 holds, and it's going to continue, look for the 1490, 1485, 1500, 1520. This would be the first area to the bull side. Then reset a little bit and continue higher. I'd like to see around this in gold to continue higher. If this doesn't set up, remember, gold is part of the fear gauge such as the VIX, such as the oil sector. You know, you see changing trends. But what I'm trying to gauge is the American dollar, which is bullish. I'm gauging the Aussie dollar, which is bearish. I'm gauging the Japanese dollar with gold. If things are going to change and the market turns south, we'll start looking back at gold to the upside and continuation. Remember, we are in the middle of these two channels. We are halfway back. If we clear the 61.8 backside of the channel, 50 Feb 61.8 from the high and low on gold to the upside. If it falls through this channel, look for the first breakout of this channel. This is the 1440 area. And we had this breakout on this area here. This gap has never been filled. Are they going to come back and revisit? I'd like to see it there because it's inside this wider, you know, uptrend channel on gold. It's possible. If it doesn't, it's great. We'll still try to trade what we see, okay? That's gold. Let's take a look at CL. CL, you know, Friday I wasn't taking a look at oil closely myself. I wasn't seeing it, and it happened in the overnight part of the move down. I expected, to consolidate around the 56.20. It didn't on this oval. It fell through it. Couldn't hold on, hit the 50 SMA, broke through the channel, which we had this channel, you can see it, and fell all the way down. We have this up channel, down channel, midpoint of this channel. So far now, if you look at this cone, we retraced 100% of the move back to the downside. If oil is gonna get its support at the 54.75, 54.75, look for a U-turn 1/3 of this candle back up here. If it cannot consolidate and go back up, the backside of the target is down here before we can get to this oval up here. So remember, we're going to trade what we see, not what we think. This was a big candle reversal, which eliminated a lot to those three side action, and we fell through. So let's wait to see what oil is. It's inside of a cone. If it gets support at the 61.8, that would be the first target and bounce back up. If it U-turns and comes back in here and range and consolidates and takes off back up, then that's the other side of the fence. So let's take a look at 2-3 other instruments. I don't want to keep it too long. I just want to make it short. Apple has been grinding higher. We do have these gaps. Keep an eye on 266 if it falls through it. Amazon, AMZN. Amazon, had that move up on Friday, fell back in. Let's take a look at BABA. BABA had a nice move up on gap, continuing higher. Keep an eye on this gap. It doesn't fall through. It can continue higher. It falls through back to the backside of the 188. Facebook had a doji. Wednesday was an up day, so let's keep an eye what it does. Google, that's the ABC. It's inside that cone, holding by a hairline. It fell through the 1310. Keep an eye on the 1310, 1312 for a U-turn back up. If it stays under pressure, first target would be around 1270, 1275 for a possibility of a U-turn back up. NFLX. Netflix is been grinding higher. It's holding as long as it holds the 304 area, 305, and it can break out through the 320 area, up target is 330, which is this oval here. I had it for the reason because we fell through this area here first, and this is why that oval was there. Let's take a look at Tesla. Tesla was a very good example that I talked to an analyst in Texas. He had asked me what you think of Tesla. I had given him from the earning report, it can reach to the 362. If it can break through the 362.23 cents, it can continue to 378. But unfortunately, the 362 was a brick wall right there. They announced that new truck that they had. Some people had good news, good vibes about it. Some didn't. And eventually they gapped down. They tried to rally it up, still below the 344, 340. And I said, be careful if it goes below the 344, 340 area. We can go back to the 310 area, 310, eventually to the 295, 304. That would be an area where you would look to see if Tesla would be the first thing to fill. If this doesn't fill the gap, if it fills through there, it cannot hold. Where can it go? Fill 100% of that gap of the breakout on the earning report. And I don't want to sound bearish on Tesla. I trade what I see. There was a possibility on that push up to the 360. Now it's coming back. It had lost. If it loses the 310 area where the consolidation was before the U-turn higher, because that distance from here to here, and the distance from here to here is 138. And if I take the distance from high to low, where's the extension to the downside? Let's do this on a Fib. We're not going to do a box. I'm going to look at a Fib, show you how to do it. We're going to do it the other way around. We're going to grab the top candle here to the bottom of this breakout. And you can see the 38% is around the 290. The 123 is 298. So if it's going to fall through that 38.2 Fib, that 328 area, 325 can hold it, look to the 100% retracement to the 310 and eventually to the bottom side. If I grab this 100% of the move of the earning report Where can it fall? The 280, the 272. So be careful when you're trading Tesla, because it's very hard to short. You can only do it in options. Trade the trend of it. Don't be biased to being bullish or bearish because people like Elon Musk. They don't like the company. I don't like the company. I trade what I see. I don't hate the guy, but I like to trade it. Okay, so that's Tesla. Let's take a look at Goldman Sachs. That's in the banking industry, consolidating, cup and handle. BLK, BlackRock, similar situation, trying to break out. Visa, people spend money. MasterCard, here you go. I want to talk about CAT just for a second. This is Caterpillar. Remember, it's in the construction, it's in the construction, but it's consolidating in this up channel. If it's going to fall, look for the 50 and the 38.2 because this is the prior breakout. Because if it doesn't hold here, the 140, I'd like to see here for a continuation higher. And if it breaks up, it creates a cup and handle. That's great. Go for the upside. Here's DER, DE, because the earning report on DER fell through the prior consolidation 1, 2, 3, 4, 5, and we broke up. We came back and retested this area. If DER cannot hold here, look for this area here between the 165, 160 for a possibility of a buy and go back long in DER. Remember, because of the tariff wars, the agriculture, winter's around the corner. If the United States will be selling more corn, more agriculture to China, DER will do better. Remember, because there's a slowdown in that industry. And let's take a look at the ExxonMobil. And that's ExxonMobil due to the oil sector hasn't been able to move. Chevron is the same situation. You can look at the ETFs of those funds. Let's go back to ES and I want to wish everybody the season greeting for Thanksgiving, their family and loved ones. And at the same time, let's trade what we see. I'm not biased to the downside on this cone or this channel. Remember, we have 12 virgin pucks we never revisited. If that 52, 55 cannot be cleared to continue high and we fall through this first wedge, the first channel is this one. I put that channel here, and that's your 18 SMA. Remember, I said 1337. It's still holding us up. If it falls through, back to fill part of the gaps. Okay. Hope you enjoyed it. I know it sounds a little bit more technical today. Try your best to follow me. Look forward to seeing you on Discord or SolsticeATR. Take care and see you on Monday.